Okay, so part two, cash flow statement, very important for decision making. Fits into the scenario of a spreadsheet very nicely. We can reproduce it using some of our computerized accounting programs. If you're using QuickBooks or one of the other programs out there, they'll build you a cash flow. You can export it, import it out of there to a spreadsheet so that you can manipulate it, which you might be asked to do by a lender, or you can build your own scenario. Just say this is a best case, average case, or a worst case scenario. You can do 3 scenarios. You can do 15 scenarios if you want to. I would always say is keep it as simple as possible. I do like to look at scenarios as far as this goes, but I don't want to get too far out there. All right. Now, just a word to the wise. I want you to research it, probably in this chapter of the cash flow. What are the things that are in the income statement that aren't in the cash flow? And reverse that question too. What are the items that are in the cash flow that aren't in the income statement? Okay, so there's a couple questions for you. You'll see them again, just warning you, and you can do a little research there, and hopefully it'll stick. All right. Okay, so the basic idea of a cash flow is right here, and this is right from your text. So let me just kind of point some things out, and the simplicity of it is how beautiful it is. Yours is probably going to look a little more complicated than that. If you have a business, if you're just talking about your personal cash flow, then maybe not. So anyway, you're going to start out with so much cash that's available to be used in the business, and we call that the beginning balance. Okay, right off your checking account. So you have that information at your fingertips, whether you keep it the old-fashioned way with the register, written register, or you actually can go back and take a look at what it looks like online, which most of us have access to that. All right, any cash, any receipts, it's describing them here, that come into the business, that go into that checking account, actually will be recorded on the cash flow statement in the period that they were actually received. Okay, the actual cash comes in. So we add these up with the beginning balance, and we get total cash available. Okay, in a real simplistic type of a cash flow. Then we take all the expenditures, all right, everything. If you have to write a check for the pickup truck, for the tractor, the land payment, all those things, all the operating expenses of feed, seed, fertilizer, fuel, all those things, electricity, will actually be taken out during that same period that they are actually the check is written. Okay, you may actually participate in the business and pull money out of savings to put into the business. That will be recorded next. Okay, and these could be set up a little bit different depending on what kind of cash flow you're familiar with, if you already are. Then we want to add the cash borrowed, all right? And we would, in times that we have capital purchases, we're going to maybe have some cash that's borrowed that would be put into this account, and then you automatically write a check for the pickup, the tractor, the land, whatever it happens to be. Or this could be just during that time of deficit that we talked about in the last video, is that you are coming up against, what I typically did in business is that I always said I want to have at least $1,000. Maybe it's $5,000. I want a minimum in that account. And as I come up to that $1,000, you can set it up so it's automatic. It sends you an alert. And that's the time that you pick up the phone or communicate somehow with your banker that you need an influx on your operating note, and you're going to need, you've got it, everything's projected out. It looks like you're going to need 10,000. You're going to need 25,000 to get through the next month. That's where that short-term, the cash borrowed would come into. Now, the next item there is we're going to actually make our payments, and that could be under expenditures, anything outflows, but actually having it separate is a very, very good idea. So just so that we can just monitor, all right? Cash flow is all about monitoring the cash. So I like that we would pull it out separately. So I think it should also be your not only short-term debt, but if you have long-term debt that you have to pay on, okay, those would also show up in your cash flow. And I think that's just an oversight they overlooked on this particular cash flow that they show you. So, and then if you're pulling money out in draws or any other way, of course, wages would be an expenditure. If you're a partner or a member of an LLC or where you're actually taking draws out of the business, that's an outflow. So that's going to also be recorded on your cash flow, and you're going to come up with an ending balance. Now, the dynamics of this statement is that we come down, we have our beginning balance that's going to be posted right here. It's going to then become a part of total cash available right here. And then we deduct all these things or increase it by inflows to savings and cash borrowed. Okay? And then we're going to come up with this is how much we have at the end of that period. This figure here automatically moves up to the top of the next period. So this could be February. And then we go down through the same process, posting those checks into these different categories. All right? So let's take a look at a real cash flow for a business. And probably the first thing you're going to notice about this one is, look, boy, it's dated. It is computer print, so we do know that it came along after the advent of the computer, 1985. This actually was generated at the time I was at graduate school in New Mexico, at New Mexico State University. And I think I've told you this, but the professors that put together this book, actually, they put this together during the time I was there. I didn't have anything to do with it, but they're a great couple of guys, and they put together really a simple book, and that's what I like about it, because finance and record keeping does not have to be really complicated. So here's what we're talking about as far as the periods involved in each one in a cash flow. And let's just talk about these and not get too long-winded about it, but just to describe them, okay? So here, this column here, we've got total. A lot of the times I see cash flows, and this total is actually put over on the back end, over here, of the fiscal period that we're measuring our cash flow in. But it doesn't matter. Whatever you get used to. Spreadsheets, we can move them around however we want them to be, or however our lender, if that's who we're sharing this with, wants it to be. So anyway, so this is the totals for the whole year, just so you have it kind of squared in your mind. At the beginning of January, we have a beginning balance in our checking account of $800. And then here's some of the receipts or categories that our receipts can fall under. Okay, so we've got 2 through 7 right here. And you'll notice that in January, there was an influx of cash of livestock and poultry of $15,834. Okay, so he must have sold some livestock at that point. We also sold some breeding stock right here, some cull inventory or something like that, that would not actually show up if on the income statement. Not necessarily. It might. Part of it if it's actually above and beyond the book value that that particular asset had. But we'll get into that with more detail later too. But understand that this is something that may not show up on the income statement, at least totally. But it would show up if it's anything to do with cash. If it goes in the checking account, then it goes into the cash flow. So at this point, we have our sales plus the $800, and we get $17,484 for cash available. That's cash available to be used by the business. Something important to know at that point. Now, during the month, we had labor cost of $1,500. Okay, and we have livestock expenses, breeding, vet, etc., $1,250. We have gas, fuel, and oil of $500. Okay, we have utilities of $500. Auto, farm shares $150. Total cash operating expenses $3,900. So far, we're like the veterinarian or the doctor. We're diagnosing the patient. So far, everything looks okay. We've got $17,484 to run the business for this period. We just spent $3,900. All right, let's move on down. Livestock feed. Livestock and feed purchases. Good. Nothing here so far, but take a look at what some of these are. Capital expenditures, that would be long-term assets. Okay, machinery and equipment, building and improvements. We have items like feeder livestock, breeding livestock. We have hedging account deposits. Okay, it's just another bank account. Don't get old. That's just something we use in some of our marketing. And some of you are familiar with it, some may not be, but we may have to put some money in there or withdraw some money from it. Cash family living withdrawals right here. Okay. I may or may not. I'm kind of one of those guys that's I want this to be all business. Now, it may, I would rather have that as like our family draw or partner draw line item and show it all right there. But I'm okay with that. Any income tax, you can see later on down the road, we actually paid some income tax right here. Okay. So we got total cash required of $5,700 right there. Cash available less cash required. Okay, we have $11,784 that we actually have as available. So inflows from savings, we actually bring $1,000. That'd be just, we would type that in and actually inject that into there. So cash position before borrowing is $12,794. Okay. Now we'll talk about this portion of the cash flow, maybe in another video, but I just want you to follow how once we complete a period, the ending balance comes up here, and I can see, if I'm just taking a glance at this one, they actually have, they're going to meet all their obligations, and they actually have an alert, or they have $1,000 minimum for that checking account. I can tell that by what's recorded here. But hopefully you can see how the cash comes in and cash goes out, at least the items that we've talked about. And we might even make one short video describing the bottom portion of this cash flow, because I think it's pretty important. Very useful. All right? So we'll talk at you in a little bit.